Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the CBOE Volatility Index, ticker symbol VIX. As I've mentioned a few weeks ago, I made a guarantee that this gap down here on the VIX was the last gap that was open, and I made a guarantee that that would fill. And today, as I record this, the day after Thanksgiving on October 25th, you could obviously see that the VIX literally blew through that resistance gap fill point here, and in the process created a new gap below the market. Now, with that, understand, like I've said in the past, 100% of the gaps on the VIX ultimately fill, but I never put a time on that because you just don't know. And with this move higher in the VIX, again, this is an explosive move higher, it may take a little while before that gap fills. So next week, it could be interesting to see whether or not we break out and stay over that resistance high. Again, the VIX is an oscillating index. It doesn't trend like a stock. But we could go a little bit higher next week, Monday and Tuesday, before we make an attempt to pull back and fill the gap. So my forecast for next week on the VIX is going to be just that, where I do believe that we're going to move higher and then test this resistance high back here on the VIX, which is up there around 31.5. This could pull back right away on Monday and Tuesday. Again, it's hard to say because the markets are so emotionally charged right now. The headlines came out of WebMD. I'm looking at that today, that the WHO warned that 700,000 more COVID deaths could be seen in Europe by March. That's obviously spooked the markets. We think of lockdowns. We think of what happened in the first quarter of 2020. And so investors are getting a little nervous about that. In addition to that, keep an eye on what's happening between China and Taiwan. They're still conducting military readiness drills off the coast of Taiwan, so that could spook investors as well. And if you've been following along with my market report, you know I've been pounding the table, so to speak, on risk management, and this is the perfect example of why you really need to keep stops in place, use options, protect in any which way you can. And for our option traders who stay long the VIX, congratulations. This wouldn't be a bad area to maybe take some profits on that and then regroup as the VIX comes back down to fill this gap right here. I can erase these lines because those forecasts have been hit. And so the VIX is something you definitely want to keep on your watch list. You don't want to not look at that. A lot of traders do use it as a leading indicator. But again, my forecast for next week is that we could go a little bit higher, but ultimately we'll fill that gap. It's just going to take a little time for that to happen. Now, with SPY, because I talk about the S&P being, for the most part, inversely related to the VIX, these were my forecast lines. This was a 2-week forecast, if you recall. Said we would move up and then ultimately pull back. We came very close to hitting that target on the downside of 455.55. Again, I'm going to extend that just like this. I think we could go a little bit lower. Remember, if the VIX is going higher, we could go lower in the S&P, and then we'll have to see whether or not it bounces off of this roll reversal. Remember, former resistance often hold as support. And I even mentioned that last week. I said a lot of times after the market or any stock breaks out over that resistance, it generally pulls back to the new support. And that's exactly what we're seeing. Now, keep in mind, we still have open gaps on the SPY down here around 435, 440, right in that area. So again, risk management is definitely needed here. Do not ignore that at all. Let's take a look at IWM. For those of you who have been tracking my numbers, I've said way back that we were forming a topping pattern in IWM, and I said that it takes months for a topping pattern to form. This right here in this area right here, we could be looking at a complex head and shoulders pattern here with two shoulders to the left, a head perhaps. And now as I zoom in, look at this long shadow under that candle. This gap has filled, right? So this was a role reversal support that broke out below. Big volume here. We could see a little bit more downside. Let me erase these lines now that we've see clearly how that support level has been broken. And this is a gap fill support level now, but I'm going to draw the support down to this gap fill support level. See this? I'll magnify that. See that little gap right there? If I draw a horizontal line to the right, we are right there. And so we're going to have to see if that holds. The next support level is another gap fill support level all the way down here. So I'm drawing these, I'm stacking. The market is really getting ready to bounce off of one or the other of these gap fill support levels. So it would not surprise me at all if short-term buyers come in to try to bounce this. We have a wide divergence from this 20-period moving average. But like I've said before, and I'll continue to say it again, once this moving average has broken as a support level here, if the market rallies back up, it will most likely pull back as a resistance. Just like I draw the horizontal flatline role reversal support levels, it works the other way with the moving average. So think of it the same concept of role reversal. So we'll have to see whether or not this holds. If it holds, we'll get a little bit of a bounce. If not, we will see the prices drop just a little bit more and then possibly bounce in this area here. Well, again, we'll have to see whether or not that happens. So that's IWM. For our option traders, remember 210 all the way down here. If this support level is broken, our option traders are getting out of any positive delta or long positions, and we're going completely negative delta or short at that level with our option strategies. That's a key trigger point for option traders right across the board. All right, so that's IWM. If I take a look at diamonds, that's the Dow Jones Industrial Average ETF. Go back and listen to the recording. I said I would not be surprised if this support level breaks. That's why I extended that forecast line down below that support level right here. This was a role reversal line that was, remember I'm saying was, a support level right here. Now that it's broken, this line here turns into resistance. So if we go up and fill this gap up here, the market is now going to be fighting resistance on the way up. So it becomes harder and harder to take new long positions without the sellers coming in and taking short-term profits. So now that these lines have been reached, the forecast lines have been reached, I'm going to erase these right here and draw a new line. There is a new gap fill support level down here. Again, we're caught between two gaps. We could go a little bit lower. I don't think we're going to go all the way down to fill that gap, but I do think we're going to bounce just like that towards the end of next week. So be prepared for that. I would not be going 100% all the way, with new long positions, but if you're playing bounces, you can't do that as long as you know that this gap fill up here is going to act as resistance. This moving average is going to act as resistance. See that? You have resistance up here, and you have resistance all the way up at the high. So you have, again, the market is stacked up with resistance all the way up to these highs. So again, my long-term position and opinion of the market is going to be much lower. And I even have used the word crash and have gotten a lot of flack for that, but I'm still holding that opinion about the market. Be very careful. And so again, risk management, risk management, risk management. Let's take a look at the Qs. This is QQQ. It's the Nasdaq market represented here in the Invesco Trust. It's the Nasdaq ETF, more or less. There's my forecast lines from 2 weeks ago right there. I said we would go down to 399.02. And then guess what? We didn't go down as I expected at this pivot point. We went higher. And last week, I drew this downward line saying that I would not be surprised if we go down to this role reversal support level. See that? On Monday, right here, we formed a bearish engulfing candle, and it didn't look back. Just blew right through that support level. And then we have this big red candle on higher volume. So let me do this. I'm going to erase this little line right here just to clean it up a little bit. I would not be surprised if we go a little bit lower and then try to bounce this as well, but I think that this moving average is going to act as resistance again. This diagonal line right here is a fan line that is taken from the the longer term chart. Look at my monthly chart on this. These are fan lines. We are flirting with this most vertical fan line right here. If I zoom in a little bit more, you'll see the weekly chart looking very bearish. See this? This is a bearish engulfing candle on the Qs. So downside all the way with maybe some intermittent bounces in between here. But I think ultimately this fan line is going to break, and then watch out below, because once that support fails to hold as a trend or as a fan line, then it's going, and I think it'll go pretty big after that. So that could be a trigger point for the short sellers actually to jump back into the market right there. So that is the cues. Now I'm going to Ethereum right now, ETHE. I've been doing this on and off for the past couple of months. Ethereum is this is a grayscale Ethereum. You can see that there's a pronounced pivot point here right on the weekly chart with lower volume on the way down. Now, what does that mean? You may have heard me say that lower volume on the way down is actually bullish for the short term. Now, if I go to the daily chart, you'll see that I was calling for a bounce up to a target up here of 43.87 on Ethereum. Monday and Tuesday, we did rally. Let me zoom in a little bit more. We did rally, but we never went all the way back to fill that gap. This support level is holding, interestingly enough. So I think Ethereum actually could move just a tad lower Monday, and then I think we could see another bounce right here up and getting closer to this moving average. So if I were in Ethereum, which I'm not at this particular point, I would definitely keep a stop loss order somewhere below 38 and keep an eye on that. I would not hesitate in a moment if I had it to move to cash below that level and then look for a new bounce or a new support level. It may be one of these gap fills down here. So that is it. I hope you had a great Thanksgiving holiday. This is a weekend and a lot of people are relaxing. I look forward to speaking with you next week, and you have a good one. So long.